Thank you for joining me. I'm Alex, and I want to talk about basically Budweiser today. So, what they do is beer, and that is one of the main reasons why I think that they will be doing fairly well during this whole crisis. Obviously, the sales to restaurants and bars kind of stopped for a while there, but private sales obviously spiked quite a bit. So it's kind of anyone's guess whether or not that will be a net positive or a negative, but I would assume that the direct sales to consumers would be much more expensive and much higher margin than sales to bars and restaurants. So current price is $40.90, which gives them a market cap of $80 billion. Dividend yield is almost 5% with a payout ratio of 153%. Obviously a good thing. Revenue $52 billion, earnings $9.1 billion, which is up from pretty much half that, which gives them PE of 25 with a forward PE of 13. So definitely things were expected to go in the right direction. Can't really make a judgment of things going in the right direction. Total assets $237 billion. Total liabilities $125 billion, which gives them a total stockholders' equity of $76 billion and one of the best balance sheets that I've seen in quite a while. So obviously, with a balance sheet like that, they're in pretty much no danger of going broke, especially with sales continuing at pretty much the same pace as before. The dividend yield is pretty amazing. The payout ratio is not that great. But considering that we're going from a PE of 25 with a dividend yield of 5%-ish to a PE of 13. So with a PE of 13, they could actually sustain a slightly higher dividend than they have now. So overall, if things go as expected, there shouldn't really be a problem with the dividend. Would be like 70-ish, 75%. So it's high, but it's not too high. If things continue to grow, and as you can see, revenue actually dropped in the past year, you would think that would go back to growth. So overall, I don't think a growth investor will have any interest in this stock. For a dividend investor, the dividend is quite nice. The current payout ratio, obviously not so great, but the next year it should be much better. It's a fairly safe and stable stock, so that should help. And for a value investor, the balance sheet just looks amazing. The forward PE is decent. Anything under 20 is reasonable. The dividend is amazing, and obviously the lack of growth in the revenue kind of hurts us, but if they can go back to a PE of 13 instead of the 25 they have now, I think that more than makes up for that. So I think that for a value investor, this is going to be a very interesting stock, for a dividend investor as well. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.